Let's go to the business news now with Giles Beckford. Giles, we know that these have been tough times for some media companies, and Sky TV, it's the latest one to be rattling the hat, is it?
So to speak. It's announced today that it's raising $157 million. That's to help it pay down debt, but also to fund its expansion. It gave us a snapshot of the way business had been, especially during the lockdown. Now, of course, a lot of people would have thought that Sky, it's a business that's been in change. It's had significant issues, which led to a big write-down in asset values last year. Surprisingly, it managed to hold, by and large, its core satellite service customers. And people say, well, satellite's by and large dead raw streaming. But apparently not. There are close to 500,000 households in this country still taking Sky satellite service. They're regarded as core business. The big growth for them during the lockdown was in streaming, as we would expect. They have Neon and Lightbox. They intend to put the two services together, but they had such an increase in subscribers. They actually had 1 million or more than 1 million people taking one or other services, streaming or satellite, during the lockdown. Now, they had a target of 1 million customers sometime in the future. So COVID-19 lockdown was good for them from that point of view. Interestingly, about this cash raise that they're doing, most of the other ones that we've seen from the big companies, the bulk of the money that's being requested has been pointed towards institutional investors, the big superannuation funds and the like, the broking firms. They pick up the lion's share. Existing customers or shareholders get a smaller slice of the action. It's the other way round for Sky TV. The existing shareholders are being expected to pick up more than $140 million worth of the shares that are being offered. Institutional investors are only picking up around $9 to $10 million. Interesting there, the price is deeply discounted. It's 12 cents a share for the new ones being offered. The last traded price for Sky TV was 33 cents. That was yesterday. So it'll be interesting to see how that pans out, how many of the existing shareholders care to take up their entitlement. It is underwritten, so the shares will be bought one way or another. Sky will get its money. And it's expressing some quite adventurous plans for the future. As I say, Neon and Lightbox will be brought together. A new streaming service will be announced mid-July or thereabouts. But Sky is also looking to do broadband, so it will provide the content for a broadband supplier. In this case, the betting is that it will get into bed with Chorus, who of course have been rolling out the national network. And they've also got plans in due course for a mobile streaming service. And given their strong links with Vodafone, you'd have to say that Vodafone is probably odds-on favourite to pick up that one there. So the company still has a lot of challenges, but it looks like for the time being, at least, it's managing to face them and perhaps make some progress.
Let's stick with the media theme then. So NZME and Stuff. This is a rolling saga. What's the latest?
Rolling's not the word. You could take acres of print to tell this story. You remember we got the headline decision from the High Court earlier in the week saying no to NZME's bid to try and make Nine, which is the Aussie company that owns Stuff, to make them still talk to them. Basically, they wanted exclusive rights to negotiate possible purchase. The court said no. Today we got a redacted judgment from the court explaining why. Essentially, there are other potential bidders in the waters for Stuff. Nine didn't want really to have a bar of it with NZME, saying essentially that too many hassles in the way, too little time to resolve them. The government wasn't going to give them the special legislation that they wanted, so that was a big impediment. And the court's basically saying, well, look, that was done, that was history, away you go. And of course we saw NZME wave the white flag and admit defeat. We'll wait to see who emerges as the potential bidders for Stuff, what price they're willing to pay, and more importantly, what services they're willing to sustain.
And what are the numbers looking like at the end of today on the market?
Well, as we use that technical term, upsy downsy for the market. It was upsy in the morning, and we've ended on the downsy, down 56 points for the top 50 index. That's about 0.5%. That's 10,732. On the currency market, Kiwi still some strength about it, 61.2 US cents, 93.2 Australian, and we're back above 50 British pence.
Thanks, Giles. That's Giles Beckford with our Upsy Downsy business report there.